If you give up, you're like everyone else. Chris Everett Lloyd. I remember her from my teenage years. A great female tennis player, somebody who knew not to quit. It's all about sticking with it. 10 to 15 minutes a day, that is all we ask. I am traveling today in an airport, and if you hear a lot of noise in the background, that is, of course, the announcement for flights. I apologize, but I'm going to get this out to you timely. Now, let's see what's going on in the markets. We see the S&P and the Nasdaq 100 down for the day. S&P down 0.11, Nasdaq 100 down 0.67. Bonds are also down a little bit, 0.17. Gold is up a little bit, 0.36. So not a lot going on in the market today. Let's look at the week. Look how much weaker the crossover going up is as we get through Thursday. We still have Friday. Market could be up big on Friday. If it is, then of course you can expect this to stay. If it's down much, it might go flat. We may not have a crossover. We'll wait. We will see. We have a green up candle that's forming. We see the derivative oscillator losing downward momentum, price percent oscillator trying to cross over, going up. We look at the 2-day chart. We can see how the price percent oscillators flattened. And of course, we had several prior green candles up through Wednesday. This first day of the latest 2-day candle, which will end tomorrow, red spinning top, indecision tending down. We see that the derivative oscillators continuing to gain upward momentum. And we can see where things had pounded down over 2 days, starting in the afternoon on Tuesday, then Wednesday morning and afternoon down Thursday, and then regained a little bit, still down for the day, 0.11. We're going to go ahead and redraw our 4-hour trend line. That's what I like so much about TC2000. So easy to redraw. There's a link in the show notes if you want to get a discount on TC2000. Also, the special training for everybody who subscribes. You can subscribe for free at chartingwealth.com. Special training today is about the weekly market worksheet, how actually to fill it out and use it. We want you to have it. You will get a great deal from it. It will supercharge your training. You will see in your show notes a PDF for free that will link you to the daily market worksheet, weekly market worksheet, and trade worksheet. I'm going to be sharing those trainings with you on how to use those over the next several days. So subscribe if you're not already a subscriber. So again, we will wait and see how things shake out. We may have a weekly vertical crossover going up by the end of the week. We may not. We will let you know tomorrow at the close of the market. So get ready, be standing by. If indeed you see this happening at the end of the day on Friday, it may very well be a weekly vertical crossover. If it is super weak, then of course you can hold off there, and we will just continue to watch and see how these markets develop. Now let's go to the Nasdaq 100. It was down 0.67%, so it was down more than the S&P, not as close to crossing over. Going up is an up candle for the week. Derivative oscillator still negative. Also note that on the S&P, derivative oscillator still negative. We see price percent oscillator a little more than flat. And we go from the weekly to the 2-day. We can see again where we've got almost a doji here after 2 particularly big green up candles, 4 big days, and then petering off here on Thursday. So we'll see derivative oscillator still gaining upward momentum. And of course, by the end of the day, we did have a crossover on that 4-hour chart, moving down, and I'll go ahead and redraw the trend line there. And again, that's our weakest of all 3 of our time frames, but we do pay attention to it. It does help us. So that is where we are on stocks. Weak for the day, but again, blowing off some steam after some heavy up movement at the beginning of the week. Now, going to go back to the weekly chart and go to 20-year bonds, down for the day 0.17%. We see that the price percent oscillator is still negative and heading down on the weekly chart on 20-year bonds. We have a solid green spinning top, which means a slowdown in the down movement and indecision tending down still. It's a solid green. It's not an open box green, which typically means strong up movement, unless, of course, you have a wick on either side, which again adds an indecisive element in there because you've seen forces pushing it up and down. So we look at the derivative oscillator. It is losing a little bit of downward momentum as we go into this week. Today, we've had, again, up movement on Tuesday and Wednesday of this week, and we have a green up candle, even though it was a down day for the week. This is Heikin-Ashi candlestick, so it's showing you average pace. We see the price percent oscillator moving up and the derivative oscillator moving up. Still negative, though, so you still have a negative down frame as far as the weekly chart goes. And overall, remember, all things being equal, market tends to move in the direction of the largest chart, which is the weekly. And of course, that and the 2-day are down. We go to the half-day chart, and we can see several days of up movement. And then, of course, that weakening this afternoon. That is Thursday afternoon. Price percent oscillator losing some energy, as did the derivative oscillator, but still positive. So we'll watch and see how bonds sort themselves out and how this week ends. That is where we are on bonds. Again, you can see a lot of indecision, indecisiveness in the market. Elections coming, and there's just a lot of iffiness in the air. So we'll wait and let the charts lead us. We don't have to do anything until we have clear signals, okay? You don't have to trade. And if you don't know what to do when the charts aren't clear, you wait. Worst thing to do is lose money. Best thing to do, make money. But don't risk money in a situation where you don't know what's going on. That's why we practice trade, practice trade, practice trade to learn this art and this craft. That is how you learn. That's what we teach. We're not a stock calling service. We're an education firm. Now, let's lastly look at gold. And that weekly vertical crossover on gold back on September the 11th. The next week was a bit of an up week, some indecision there, and then, of course, the following week dropped off. That gave us our down move that we were looking for. Since then, we've sort of seen things sliding sideways. This week, another indecisive week, a red, almost a doji spinning top. Price percent oscillator still going down. Derivative oscillator about the same as last week. Go to the 2-day chart. It's still negative, flat on the price percent oscillator. Derivative oscillator getting smaller and smaller. We saw the last candle was a red spinning top. This one the same way. We'll continue to watch and see how it ends up. Look at the 2-day chart, just sort of laminated for the last, going from the 2-day to the half-day. The half-day just sort of laminated over the last few days. We saw some up movement in the afternoon after some indecisiveness and down movement in the morning. Up for the day 0.36%. So again, we'll just watch, see what gold's going to do. Hasn't hit $15,000 an ounce yet, has it? Just like we heard right about the time that gold rolled over. So again, pay attention to the charts, not the noise. If you don't have our book, it is available. Follow the link in the show notes, Charting Your Way to Wealth. We have an autographed copy waiting for you. Appreciate all of our Patreon supporters. Remember, at any of the Patreon levels, you get our 3-part series, Options Made Simple, the Charting Wealth Way, available for you. God bless, my friends. All the best from the whole team at Charting Wealth World Headquarters.